Good evening, everyone. It's about 9 p.m. here in New York City, and you're getting your second dose of BTC bull bear analysis. I gave you the bull case yesterday. I was standing in for my partner Sam, and today I'm going to unleash the bears. Just a reminder to everyone that the reason why we do these bull bear series is because we consider it of critical importance to consider both sides of every market story, because there are always two sides or more to every market story, and identifying the high probability counts or analysis and considering both cases, or however many cases seem probable at the time, is really the only way to escape the fate of this unlucky guy who's about to get his arm ripped off wearing the white belt. And if you want to progress from being a white belt who's getting their arm ripped off to a black belt who's consistently profitable in any asset class, any market condition, we will be glad to show you how. Come check us out at TradeDevils.com. Alternatively, visit our Twitter page, and at the top the pinned tweet has a giveaway. We'll be giving away 3 lucky participants memberships for free access to Trade Devils for depending on which prize is either multiple months or 1 month. And of course, always check us out at our free Discord if you are unable to join us on our member program, and we'll be happy to help out and give you a taste of what we offer. Alright guys, so here we are back on Coinbase on the 3-hour, same exact chart that we had for the bear case, but I took out all the markings and left this little hot box. Remember, we did a bunch of analysis, an hour's worth of various methodologies, not just Elliott, to gain some confidence that there's a reaction that's going to happen between, call it 5,100 and 5,400 or so in this hot box. Okay, so I'm going to keep it on there for now, but we're going to put on a fresh bear count, and the reason why I kept this here is this introduces a new wrinkle to the bear count. Recall that we had multiple possibilities for what the bear count likely could be. This being a lower low relative to this low, this 5.8K low being a lower low than this 5.9K low, created a situation where what this could be after this first low to the right of it was highly limited. Obviously this could be a B wave as we counted it in the bull case, but it also could be a very tiny X wave, which I've generally not been a fan of, because X waves need to be, well, not need to be, but it's a very strong guideline that they retrace 90% of the W, or if it's a triple combo, then a Y. Even for multi-zigzags where that's not the case, typically 50 to 618 retracements of the first or second zigzag by an X wave are more credible, more likely. But this is kind of a no man's land. It's around 40% or so, if you guys recall. Let me just pull that fib because we're going to use it later. Okay. I like to get it very much right on the tick. Okay, so yeah, around 40%, give or take. So that lack of height made me, and also just how short it was made me doubt it as an X wave, and so I had it as a combination, and I had this as part of the X, A of a flat or A of a triangle, and the flat or triangle being an X wave. Now, if this happens, that becomes highly unlikely, because then what is this? It's clearly 5 wave, 1, 2, 3, 4, 5 on the way down, and so it doesn't really fit the storyline of this being a part of a broader X, right? So while all those other counts we talked about are still alive, given that a new low has not been minted yet, I strongly believe it will, and so the count I'm going to introduce today is a triple zigzag. Now let me explain to you why I think a triple zigzag as opposed to a triple combo is the one to focus on. For one, I'm a strong believer in the guideline that X waves should retrace a substantial amount of the preceding corrective structure. So if this is an ABC zigzag W, which I believe it is, this X wave is only credible to me as part of a WXY where this is a triangle, but for the reason that I said, given this likely endpoint to this move, that triangle is invalidated. Or if it connects a zigzag to another zigzag. Now, this very well could be counted as a zigzag. Remember that we talked about counting it as 1, 2, 3 of a 5-wave multi-zigzag structure called a diagonal triangle, right? So I don't need to do that count again, other than to say that maybe it's just a zigzag and not a diagonal triangle. If this is a credible diagonal triangle and all the measurements we talked about in the bull case apply, well, it could very much apply to this being a zigzag as well. Creating the possibility that this is indeed an X-wave, ABC, and this too is an X-wave, which makes this the beginning of the third zigzag and a triple zigzag. Of course, there are other counts, but I don't love the other counts given what I said about the X-wave retracement guidelines and also the wave shape of this structure, of this, what I now think is a zigzag. First of all, it just measures so cleanly as a zigzag. We measured the wave relationship prior to this video, because on the bull case we had each lag measured at 786, right? You guys recall the relationships between the actionary waves and the reactionary waves was 786, which is quite interesting. Well, that same point of interest makes this a very credible zigzag. Well, the C wave is related to the A wave by something pretty close to 100%, and when it's longer, typically it's like 1272 or something like that. More rarely 1618, but certainly possible. And when it's shorter, it typically is around 786 or even 618. Now, it can't be 618 here, or it would be a failed zigzag, meaning the C would not clear the low of the A. And so the fact that it lands 786 almost on the dot makes this to me a very credible zigzag pattern. If you recall from the bull video, we also measured the retracements of the B, of what I'm now calling the B, relative to the A. And it was almost on the dot, 65%, if you recall. And that's a very, very nice measurement to see in a diagonal triangle. Textbook, basically. But also the case for a zigzag, 50 to 618 being the most likely retracement levels. So many of the arguments that we made for this being a diagonal triangle measured so well also apply to this being a zigzag. Now here is a new measurement we did not do in the bull case. We measured the retracement from this move here by this move here, and that was also 65%, which was confluent with the geometry of a zigzag, or sorry, a diagonal triangle, or diag for short. We did not measure the retracement of all of this by this. So let's do that. This swing high, beginning of this Y zigzag, to this swing low, and what do we get? Well, look at that. We get pretty much the same exact measurement from a retracement standpoint as this. making this likely to be a fractal of this relative to this relative to this, which makes me excited about the possibility of W, X, Y, X, and then Z somewhere down the line. So one of the things I look for when there are triple anything, but in particular triple zigzags, because the pattern for each actionary wave, i.e. the W, the Y, and the Z, is the exact same, which is a simple zigzag. You can only have simple patterns in the W, Y, and Z positions. You can't have a triple zigzag that has a W that's a double or triple zigzag. It's got to be just a simple ABC. Same thing for the Y and the Z. The retracements, the X waves, the reactionary waves in a multi-zigzag or combination sequence can in fact be just about anything, or literally anything. It could be well, some restrictions. The first X can't be a triangle, for example. But as far as, you know, an individual X wave considered could be anything. It could be a combination, it could be a multi-zigzag, it could be a simple pattern. So I would say very rarely they are more than a simple pattern, and most often they are zigzags. But it doesn't break a rule for X waves to be all types of things. Now, the W, the Y, and the Z, again, must be simple patterns in a multi-anything that has X's retracing this lightly. It is highly, highly, highly probable that you're looking at a multi-zigzag combination, not a sideways combo. So one of the things I don't love about this as a multi-zigzag sequence is that you have a very vicious, aggressive W, almost looks impulsive, and then you have much shorter Y's and possibly a shorter Z, although obviously this is just beginning, so who knows. So the focus of today's analysis will be how can we credibly count this as a triple zigzag, given that that's the case. And the core lesson for today, if there is a lesson at all that I want to convey to you guys, is that I've said this before actually multiple times in previous videos, and I just want to reiterate that it has nothing to do with Elliott or anything. It's just a TA truism that generally speaking, when you're looking at either fractals or patterns within a larger, broader pattern that have some kind of relationship, whether it's the A C leg of a zigzag or a flat, or you know, W and a Y and a Z of a triple combo or a triple zigzag, etc. There is some nuanced relationship between price and time for each of those legs of a particular sequence. So because this W is so sharp and aggressive and so much price gets traveled, let me just tell you exactly how much. And I'm going to be anal and get it to the tick because this is actually going to be part of our analysis today. And also because I'm anal. Okay. The W traveled $14,000.19, guys. That was a vicious, vicious move. I mean, this thing could have been just the entire correction by itself, and it was deep enough. It wasn't, you know, enough time, but from a price standpoint, certainly covered a huge amount of distance, right? Well, how much did this second potential zigzag cover? Now, we got to make a decision here. Are we going to count this as the low? Or are we going to count this as low? Remember that in some exchanges, I think maybe only Bitstamp, but possibly others, this was the low by like a penny, but still it was a low. And most other exchanges it wasn't. And so I think for the sake of geometry, it doesn't matter too much which one you pick. And so I'm going to not pick one for now until we do the analysis on time and price that we're going to do today, because this analysis, generally speaking, doesn't have to be aligned completely with Elliott wave count. It's has nothing to do with Elliott wave. It's just, like I said, a truism of technical analysis broadly. So why don't we pick the first pivot here, because we're on Coinbase today, and then if it doesn't measure as well as the other one, then we'll try the other one. But from here to here, once again, need to get it real accurate, because whenever you do anything related to time projections, time measurements, calculating ratios off of time, generally speaking, it's just less accurate than price. For the simple reason, I believe, that most people that are in the market, whether traders or otherwise, focus on price. Most of TA, I would say 80-90% of it is focused on price, maybe 95% of it. I actually don't know that many TA people that do much time-based TA. I think that's a huge mistake, which is why I'm such a big fan of geometry. Geometry forces you to think about time because, well, you got a y-axis, and then if you want to consider the geometry of price, then you got to focus on the x-axis too. So this will be, I guess, a lesson on time as well as geometry. When I say what doesn't happen in price is made up for in time, or something like that, what I mean is, if these two structures are either fractal or related in some way, and a triple zigzag is nothing more than a zigzag that's fractal, that occurs consecutively 3 times, interspersed with x's, which often are zigzags anyway, right? So I would consider x's fractals of each other, and the w, y, and z fractals of each other in a triple zigzag combo. Well, I'm expecting a very significant percentage of the time. It's not a rule, but a strong guideline, I would say, that there's a relationship between this time, 991 bars, and this time, 408 bars, and that is an inverse relationship between this price distance traveled and this price distance traveled. So because this happened so aggressively and covered so much price, I'm expecting it to take less time than this on a relative basis. And because this took so much more time or covered much less price, I'm expecting it to be less tall and more elongated from a time perspective. And what I've found is that oftentimes the relationship is very, very consistent mathematically. Let me illustrate. I'm going to pull up a calculator here. 991 divided by 408 is 2.43, give or take, right? Now, like I said, whenever you're doing anything with time, I've found that it's prudent to add a 10% fudge factor in there to whatever your standard is for price. So if you're measuring, say, the 5, and you wanted to use the guideline of equality, and you're assuming that the 5 from the 4 is the same height as the beginning of the 1 to the end of the 1, right? 100% relationship. Well, if you were measuring time with that guideline, I would add a 10% buffer, so 90% to 110% range. I've just found that time isn't as accurate as price from a projections and extensions and retracements and measurement standpoint. Nevertheless, I think there's an undeniable component of time that is as compliant to Fibonacci and some of the other numerical sequences we use in technical analysis as is price. And this is the whole point of this is to illustrate that. So back to the calculator here, we've got 2.43 is the time relationship between these two, the time ratio. So I'm expecting the height relationship, the price relationship, to be damn close to this, give or take 10%. Maybe even more than 10%. It's just my little heuristic, but you can play around with it and see what you find in the markets. Crypto being more volatile, maybe it's 15%, I don't know. But So what's 14,019 divided by 6010? Okay, 14. Oops. 019.47 divided by 6010.79 gives you 2.33. That is very close to 2.4, guys. Right? You'd agree with me? I've found that these types of relationships, from a inverse correlation to time ratios and price ratios, try it out. You know, I've found it to be valid a majority of the time. Okay. Actually, let's even try it on the X waves, because these are fractals of each other. So, I mean, the screen's going to get cluttered, as it tends to be when you're playing around with geometries, as I've done a lot over the past few videos. And if you remember, you've seen ridiculous amounts of clutter, because I've covered geometry extensively of late. But for the sake of analysis, let's clutter it up some more. And when you're dealing with 10% type of fudge, as I suggested you would have to deal with when it comes to time calculations and projections and such, then you might as well try to minimize error by measuring everything to the tick. Actually, you know what? It looks like this one was not to the tick. I think I missed it by... Yeah, because these are overlapping. Yeah, this one would be right here. So my calculation was off by one little bar. Big deal. Might have gotten it even closer together to 2.4, which was the ratio we found between time for these two structures, right? So we've got this X measured as 116 bars and $5,904.86 of price traveled. Well, let's check out this X. Get it to the tick again. Right there. Zoom out and then zoom back in. Right. Actually, did I? Sorry. Screen's bugging out here. Oh, that was to the tick. Okay. Hard to see these little shadows when you're zoomed in. Okay. Good. You can see there's no overlap between these little lime green, pastel colored, transparent boxes. So, calculator again. 243 bars into 116, or more accurately, 116 into 243. 2.09 is the ratio. Well, let's see, 5,904 and some change divided by 2728.15, 2.16. I mean, guys, this is very close. Very close. What was it again? 2.16 versus... Yeah, 2.09. 2.16 and 2.09 is practically the same number when it comes to geometry of a chart that's on the 3-hour time frame. And we're looking at 8 months of price record, guys. This is not coincidence that this is like this, that these ratios are inversely correlated. It's not coincidence. Just like it's not coincidence that these retracements are exactly between 382 and 50% for these X waves. And just like it's not coincidence, this is a 3-wave shape, and this is a 3-wave shape, and you have a similar price and time ratio relationship between these two moves, this W and this potential Y. So what I posit to you is, if you go back throughout history and look at major structures of fairly liquid assets that behave technically, which is practically everything, you're going to find this a lot in the wild. Might be off by 15% sometimes, might be exactly 100% more rarely, but with some fudge factor there is a relationship. which is why there's this saying in TA that what doesn't happen in price usually happens in time, or made up for in time, gets made up for in time. So that's exact. This is the perfect illustration of that saying. So if this is a triple zigzag, what does that say about this potential Z? Well, first of all, we got to have this initial leg, which is likely the A of this potential Z, completed. And given how well measured this X is to this X, I think this is the end of the X. I mean, there's an argument this is all part of the X, the second X still. But again, just given the ratio calculations, I think it's much more likely that we're working on the Z now, right? We'll see what happens over the course of the next few weeks as these potential targets get hit or not, and we'll adjust our analysis based on that. But right now, for the primary count, you got to go with this being the beginning of the Z. It just makes the most sense from a geometry standpoint, from a math standpoint, from a wave shape standpoint, from just about everything standpoint. I was going to say from a Elliott wave count standpoint too, but that's not true because the X wave could be a expanded flat. This could go down here and then go up here and put it and end it, and then that could be the X wave, and then the Z could ensue from there. So yeah, there's that possibility, but for now, the count I'm going with is this being the X and this being beginning of the Z. Actually, one of the things I want to do is I want to note these ratios because we're going to use them to project the Z. And then we'll end the session by using other forms of TA to confirm or deny the feasibility or likelihood of that Z using simple math and wave ratio or time and price ratios. So let me pull the calculator down, and I'm going to look for the note. Where's that little note? Oh, this thing. Okay, so let's start with price and time. W is related to the X in price by, and remember we moved it slightly one bar, so for the sake of being ridiculously anally accurate, let's redo the calculations. So price would be 14020.75 divided by 601293. We get, whoops, 2.33, let's say. As far as time's concerned, W, sorry, not W and X, what am I talking about? W and Y. Not singing my ABCs here, so, and then, time would be 991. Oh, sorry, oh, yeah, time. 991 divided by 406. 2.44. Very close. X to X. So X to X would be 243 divided by 116. 2.09. I remember that number. And then in price it was, whoops. In price it was 5,904.86 divided by 2,728.15. 2.16. Man, I just looking at it like this, written down, it's incredible, huh? Geometry, incredible. So then y to the z So this is the big question. When we're forecasting the Z, and we're using simple ratios, what are we going to get? Well, the big mystery is we don't know what the Z is going to look like. I mean, this is may possibly just a piece of it, possibly just a piece of the A. So if we assume that the A ends here, that was the whole point of all that analysis we did in the bull video, so let's just not redo that here. You can go watch that video if you forgot. But assuming that the hot box between, call it like 5100 and 5400, or give or take, in other words, which algo target was it? It was this one. It's covered by this red thing here. Let me just take this away. Since we've calculated these ratios, I'm going to take these away. Actually, you know what? I'm going to need this one. I'm going to need this one to use it for the Z. So I got to... I thought I could move the label upwards, but it looks like I can't. It's annoying. Yeah, I'll take the background off from this one. That way you can see this minus 236, which was being covered by all that red background. So this was the algo target from this golden pocket retracement. And that gets you to 5062. So let's just use that, 5062, as the endpoint for this move. And let's use, let me zoom into the 1 hour. This is such a ridiculously well-channeled move, guys, that we can just use the channel as a projection for where it'll end and probably be accurate. It's such a well-channeled move. And this time I'm not using a Elliott wave channel. I'm using a good old standard TA 101 basic ass channel, where you're just connecting wick to wick, or body to body. And look at how well this channel is. And look at this median line. It tells you where price is going. So gotta love that channel. So let's extend it and use it to guide us as to when it's going to meet this minus 236 algo target. So let me make a horizontal line here to demark this algo target. Make it white for now. And then when we zoom out to the 3 hour again, now we can see it better. And let's assume that this ends somewhere around here. Okay, right around here. It's an aggressive assumption, but if we're going to try to do these projections and sanity check our analysis, then you got to use some form of TA consistently. And we've been consistent about applying algorithms and fibs retracements. It's been central to every piece of TA I've done on YouTube, actually. So why stop here? So if all of it is the A wave, and we're expecting a standard retracement of 50%. Now, this one did retrace, 65%. Actually, let's measure the retracement of this one. Instead of trying to guess, that would be a better. Did this also retrace to the golden pocket? Not quite, but it's very close, especially considering how nasty this wick was. I mean, if you go from the body to the, if you go from the body as opposed to this little shadow, even on the 3 hour, you get the same retracement level as you got here. So I'm going to go with 65% retracement just because it happened here minus this wick, and it happened here, and it also happened here relative to this, right? So it seems like price is obeying that golden pocket quite well. So I'm going to go use that. By the way, as I did that, despite, you know, if you wick this off and consider this a golden pocket trade for an algo short, this minus 618, damn close to this bottom. Obviously there's a wick here, but anyway, the point being, algos matter in life, or in the markets I should say. I don't know about life. So if this retraces 61.8 or 65% of this move up to put the B of this potential zigzag in, what do we get? Well, we got a B wave here. And then a C wave that goes down here somewhere. So if the C wave is 100% of the A wave, which is the most likely length, we would go from here to here off of the 65% level. That would land us at right here at around 38.19. Now what's going on at 38.19? Let me mark that also as a point of interest. Well, at around 38.19, life is kind of boring from an algo perspective. These are the major pulls, right? This one, this one. This is a classic. Actually, not this one. This one's not. This one doesn't hit the halfway back. But if you move it, I remember I did this in a prior video. If you go from this pivot here, then it's almost to the tick 50%, and that's a damn relevant algo target right there. But still, it's 3,200, not 38.19. I guess this is minus 382 here. That's pretty close off of. Oh no, that's me measuring this potential retracement for the B. So that has nothing to do with anything. Until it happens, it's nothing. Well, what about the same length? This C leg was related to this A leg by 78.6%, almost to the tick, remember? We did that in the bull video, and I confirmed that again here. Well, 786 is 4565, which is pretty confluent with all these algo targets here. The minus 236 here of basically from this swing high, well, to this swing low. But this algo would dominate because there's a golden pocket before that. So let me, just to clean it up, I'm going to take away this pull was done to illustrate that the retracement of this X was the same as the retracement of this X relative to the W and the Y. Okay, you guys will remember that, right? So I'm just going to get rid of that because we're going to put some algo targets on here. I don't want to get it too cluttered. And then this 786 was just a measurement for the C leg, so I'm going to get rid of that. Just remember that this is related to this by 786. And if that's the case, and that's also the case for this C, let's draw a hot box around where the C might land. I mean, likely range is around here, right? Now that covers a lot of price from 28.70 to 45.65, so we're going to try to target this area a little bit more closely with other forms of TA. A little bit false precision because obviously, you know, this wave hasn't even completed, and now we're projecting the B and the C, but nevertheless, for the sake of doing this time-based and price-based relationship projection, we need to have some analysis. And this lower 1272 is confluent with this 618 major algo target from the beginning of this potential A and the retracement of the A by the B. That's pretty important. It's also not too far off from the minus 236 of this first major algo target, this pull. So this is certainly an area of high interest for us. And if this retracement is indeed 65% for the B from the A, well, it'll be squarely in the minus 618 of this algo target, which of course has yet to be put in. Another area of some confluence is this right here. If this happens, then you have two minus 382 minus 382 and minus 236. That's confluent with 78.6% around here. So just getting some more confidence around this likely range for the endpoint of the C. So let's put the C like somewhere in here. Okay, so we have enough, I think, to start our projection. If we assume that we hit this algo target here, these algo targets here, the minus 236 of this major pull, the minus 618 of this pull, and then if this happens, then the minus 618 of this pull, this retracement of the A by the B of the Z, that gets us pretty close to the 1272. So let's average that. Let's call it 3,000. 3,000. This is 2951, 2987, 32. Let's call it 3,100 bucks. Okay. So if the C ends at 3,100, and again, I'm not saying it does. We're trying to figure out whether this geometry might help us out to project this Z leg. There we go, 3101, close enough. What is 3100 divided? What is the peak of this? It's 8501 is where it starts. So calculator, 8501 minus 3,100, we said. Okay, 5,401 bucks. Well, 5,401 is pretty close to 6,000. $12.93, which is the price covered by this Y leg. So let's figure out exactly what that is. 6012.93 divided by 5401. That would give us 1.11. 1.11, which would suggest that this Z lag would take in time 1.11 of 991. 1,103 bars. So I move this here. One possibility is 1.11. So what does that look like? Here, 1,103. I may not be, well, that's close enough. 1,102, close enough. So what this suggests to me is that this B leg probably looks more like this. C leg probably looks more like this. We'd be looking at something like this. Obviously, the deeper this C goes, or the shallower it goes, it'll affect this time scale. Now, this is not some mathematical relationship that's so strong that you can trade just on this. But as we're trying to project the shape of what this might look like, it's a starting point for further analysis. So then, let's further analyze. Before we mess up the chart some more with Gann squares and such, let's clean up some of this. Let's just hide these ugly boxes. This one we may not need to hide. Okay. Whenever I'm considering geometries, I will always, whether it's quickly or spending a lot of time, check out Gann boxes. Of all the founding fathers of TA, Gann is the man when it comes to geometry, and also, incidentally, and very importantly, if history is correct and his numbers weren't fluffed by whoever his biographers were, he was by far the most profitable. I think in today's dollars, adjusted for all that time that's passed and inflation and such, he made hundreds of millions of dollars, if not billions of dollars, trading purely, or maybe not purely, but predominantly using geometry. So I take his mathematical work very seriously. He was a little bit of a kook and just a weird dude that believed in astrology and other things that have nothing to do with TA in my opinion, but his work on geometry was very, very groundbreaking and still significant. So let's start with him. Mr. Gann, tribute to you. I'm going to slap this box on my chart for you. Okay, so members have seen me do this a bunch. There's actually a tutorial in the member videos, but just for the sake of everyone who may not have watched this, when I use a Gann square, which is my favorite tool of his to use because it captures the lines as well as the arcs and these boxes too. Bunch of geometry in one tool, basically. What I want to do is I want to find placements of this tool that best explain price, and the way to start is by anchoring this 45-degree line somewhere and thereby calibrate the chart. The 45-degree line is by far the most important piece of this when calibrating the chart, and I am wanting to put it either, actually it looks like it landed right here, but I would prefer to move it up, down a little bit so that it hugs all of this price action here, because I remember, I remember drawing trend lines as these moves were happening, and this seemed to be like the impenetrable fortress that once we broke through this thing, the correction was over, we thought, and then we'd go to the moon, and clearly that's not the case. But this trend line played a very significant role in this correction, and so I'm going to start by anchoring it here. You can see all the bounces off of it, and near misses in this big wick, near miss here, right? So next thing to do is to put the arc, the first arc, in a major pivot that is central to the geometry of the entire correction. And well, this here could be one. In fact, it being the A, maybe that is the best place. Now, a little bit tricky here because there's a big wick here, so my bias is to put it next to the body. Now, we are on the 3 hour, so this may not be a wick in the smaller time frames, but when we're looking at the entire chart in this scale, somewhere between here and you can see the arc being resistance here for this move up. So anywhere between here to here would work. So let's mess around with it to see at which level it explains price the best. Well, closer to the bottom here, containing this series of moves here as well, capturing that seems to be a good spot because look at how significant these arcs are. This contains this little triangle here. It bounds them, both trend lines of the triangle, and then I mean, it even explains this little sideways fuckery here at the smallest degree. And this one very, very nicely explains this move. And this one explains this move. This seems like an important piece of geometry. And then look at this potential X wave, how well channeled it is by this arc. Just an incredible tool that, you know, when you use it a lot, you will see how geometrically the market really does move, even for an asset as volatile and crazy as Bitcoin. But again, you start by calibrating it with this 45-degree line, and then you mess around with the arcs. And as you move the arcs back and forth, these boxes, you see these boxes in the Gantt square, all of which are important, tend to find places where they're geometrically significant as well. Case in point, this line here that separates these boxes, this first row of boxes from the second row of boxes. Support, 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 resistance, 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 etc. Also of great importance are these arcs, or these fan lines. This is a 1 by 1. This is either 1 by 2 or 2 by 1, and this is the other one, 2 by 1 or 1 by 2. I forget which order it is, but anyway, just look at how well these fan lines contain these major moves, right? And at the point of this X wave, we penetrated this one, this 2 by 1 or 1 by 2, whichever it is, and then we're now kind of vacillating around this one. So you can see how well these arcs and these fan lines have contained this entire correction. Point being, there's a little bit of confluence. It's not exact, but you know, we would be towards the later stages of this sequence captured by these fan lines and these arcs by the time that this potential Z gets put in. Now what else does this tell us? Well, it tells us obviously that you could go down more and hit this lower square boundary here. And if that happens, then this entire projection would have to be compressed, because it did price more than we projected with this square, and so the time component would be compressed. Again, I'm speaking like it's law. Of course, it's not law. These are just tools that we use to figure out what the roadmap might look like, but that's the whole point of this exercise. Obviously, projecting out many months and even what this structure will look like before it's even clear that it's a triple zigzag is very presumptuous, to say the least. But I'm not doing it to be presumptuous. I'm doing it to illustrate a couple of key theories in my TA that I think could be helpful in analyzing subsequent moves as they get put in. For now, if we get a new low here, I am favoring this as a count, as a primary count, for all the reasons that we discussed in this video. And if that were to take shape, I think a pretty likely landing or ending zone for this corrective structure would be either somewhere within this curvature or somewhere in between here and here, but closer to this curvature right here. There's algo target confluence, there's geometry confluence, and even some Elliott wave count and wave time and price-based ratio confluence. So certainly way ahead of being able to make any of that determination right now. But as we consider the count, we have to look at what the broader corrective structure will look like once that count takes shape. And does this have the right look to you? Does this look like something that could happen? I mean, to me, this would have us ending the correction, what? Between October 1st to, let's say that we ended right where we projected it based on this 1.11 ratio. This would be 545 bars. 545 bars. We're on the 3 hour. Okay. That's 68 days after, what is it, October. So this has us ending the correction sometime in January of 2019 with a triple zigzag Z being put in at around, I mean, it's hard to know which price level, but if these ratios are even remotely accurate, we're looking at something in the, something with a 3 handle on it, low 3 handles. Is that possible? Absolutely. Is it credible and probable? Only time will tell. But based on the geometry and multiple other forms of analysis, I think you'd be crazy to call this an impossibility. Perhaps in a subsequent video, as we get more protracted in this corrective sequence that started in December of last year, well, maybe I'll do a time-based, fib time-based projection to figure out where the exact ending spot might be and whether it's confluent with this analysis. But for now, I'm going to leave you with this, and I'll see you guys next week, where I'll be back to being the bear devil again, and Sam will be the bull devil.